Ladies and gentlemen, I took time and listened to Molo, Member of Parliament, a youthful MP, Kimani Kuria, if I'm not wrong, if I've gotten the name right, explaining the concessions in the housing levy. And I want to tell you without blinking my eye, the housing levy was robbery. Now, the changes that have been made is what explains, is what has revealed the real intention behind the housing levy. Truth be told, if I am to meet the chairman, the MP, I can tell him in the eye. The thing was totally robbery. I want you to understand. I will explain for you what was in the provision before and what has been proposed. The housing levy was a mandatory 3% that was going to specific to a fund that was designed, that was to be, of course, there was a legislation to be made to create a fund with the management to oversee that fund so that it goes to create, to helping the housing project. But this is how it was to work. Anyone earning above 186,000, 183,000 was to pay 3%, but it was capped at 2,500. So anyone earning above, it was not, even if it was to be 3% of 100,000, then people are going to pay more. But initial submission was 3%, but capped at 2,500. So no one was going to pay more than 2,500, and then your employer also matches your contribution. That is what was in the proposal. Now, what has been changed after public participation is the rate percentage figure of 1.5 of 3% has been lowered down to 1.5. But there is something you need to understand. The capping of making it that everyone else was to pay 2,500 has been removed. So what this means is this: be it you're earning 10,000 or 1 million, all of us are going to pay 1.5. This is it. Someone earning 1 million, his 1.5 is going to be around 15,000. Someone earning 100,000, his 1.5 is going to be around 1,000. Is it 1,500? Something there. That is how it has gone. That means that someone earning 10,000 will be paying not 1,500, not be paying 150, and so on, so forth. So this is the danger in it. Initially, everyone was paying that, but look at the fact that employers' contribution is a must. It must match. And remember, the private companies were also complaining about matching the figure. So if you have a company and you're paying your MD around 700,000 or 1 million, then you'll have to match his 15% contribution, his 3% contribution with your contribution, which now means you're going to pay 30. So makampani wameumia. Now it has been marketed and spoken in the terms of the figure, but the resultant effect is that government is still going to scoop the 9 billion. Even though someone is lying to you that it will be reduced, initially at 3%, maybe you realize that those who are, if it was capped, no one was paying more than 2,500. But now Some people are going to pay as more as 10,000, others 7,000, others are going to pay 15,000, depending on what you earn. Now that is number one. Number two, the country and Kenyans asked that I don't want a house if I already have one. So I should not be forced into paying a levy while I don't want a house. So what they have done, they've actually answered rudely that question by making it not even a levy, but a tax. So a tax is going to be paid by force. It is mandatory, but getting the gist, that money will go to consolidated fund. Consolidated fund is a fund that runs three accounts. It runs revenue account, trust, and loan account. So unaona this ushuru inasanywa huku yote goes to consolidated fund. Even that housing levy, because it's a tax, it is going to that consolidated fund. If it goes to that kitty, I even wonder whether someone is gonna use that money to build a house. And that's why I want to say, it is very clear that when Kenyans protested, government was cornered. William Ruto team and the team that was working on this thing hurried. They really made a lot of blunders. Now, question number two. Will you get a house? No. You will not get a house. Now, this is it. Initially, you were supposed to recoup back your money. I think I need to start that. You were supposed to recoup back your money after 7 years, and you can even transfer it to next of kin. Now, there is no recouping back the money. So the 7 years that you will come back after 7 years and claim that money, that is not allowed. That will not be there. Neither your money nor that of the employer. It is not going to be recouped. And this money, the only benefit you'll have with it is that you can use it at one point as a deposit when you want to take the house. The houses will be for mortgages, but we'll use it as a deposit. So this means what I want is this. Not that government is going to give you a house and your deposit is a deposit of 2 months, then you get there and start paying mortgage. No. The deposit will be, if you want to know the deposit, then you need to follow what's happening in Buxton and Mombasa. Buxton, the guys who wanted the houses were told to pay more than 600,000, a deposit of 600,000, then they start paying the monthly mortgage. So even on this one, it is not yet clear that if what is the amount of deposit that I will pay from my money. That's why that money will deposit. So what that means is, if you don't take mortgage, if you don't take that house, then pesa yako imeenda hivyo. You pay the tax and this. Now, I think it's emotionally a relief than lying to someone that I will give you back your money after 7 years. Or rather lying to someone that I'm going to give you a house after 7 years, 30 years. That you're going to own a house after 30 years. Instead of the big lie, it's easy for someone just to say, I'm paying a tax. However, I think, but if I'm not going to get a house, it was not easy to make it non-mandatory. Kenyans did not want it in the first place. And so, it has technically been removed as you benefiting, but government taking it. Let me tell you something. Straightforward. There were 3 intentions of the whole housing thing. Number 1, there was never an intention to refund back your money. I can say that. This is what has been confirmed, because Kenyans never complained that, are we going to get, yes, Kenyans asked that, are we going to get back our money? Are we really going to get back our money? That was a question. So, that question has been answered not by how you're going to get that you're not going to get it. What this means that even this story of you getting the money after 7 years was a lie. There was never the intention to get back that money? That is what so far has been confirmed. Because that question was to be answered by how is the money going to operate and what is the criteria. People asked, which is this account? Where is the interest that money is going to make? There is a lot of questions in it. Number 2, there was no intention to build the houses. Let me say it this way. If we put this money in consolidated fund, this is a pool where tunaweka pesa zote. Are we going to put this housing as just like another project where money is just, we just decide how much we are taking to the project and how much we are remaining with? What is happening here is this money will get there and most probably it will get to other things and get to people's pockets. So if you put it in the consolidated fund, which is a pool, considered ni kama account inabeba revenue zote. So this has also been treated as one of the revenues of the government. How is that money going to be rerouted to a housing levy? No way. The best way was what was proposed, although people asked how. We asked the question, how? Are we going to have a board? Under which ministry? The constitution of the board? And how it's going to run? There was the whole of that question on how that was going to run. That has been abolished and that money has been taken to the revenue account. Consolidated fund is a revenue account. Hizi pesa zote from the ministry, these ones that are running these roads, that it comes from the consolidated fund. And I will tell you something towards the end of this analysis. To understand, I know someone might want to understand more about this consolidated fund. I will use an example that will make you understand. It will not directly be rerouted to a housing. Number 3, the employer share that we were told about was unavailable. Because sini consolidated fund tunatoa pesa ya kulipa salaries. And the same government is one of the biggest beneficiary, one of the biggest employers when directly has to cut this money from the employees. Are they going to the loss? Where are they going to? If that money is not going, if this deduction is not coming from consolidated fund to another fund, maybe that is running it, then do you even believe that they will be putting it? No way. No way. They're not going to incur that loss as an employer. But clearly, it was a plan to rob the private sector. Yes. Because in terms of rate, it has been reversed downwards. But the capping has been removed, which to some extent, nothing has changed. Someone who was supposed to pay 15,000, supposed to pay 2,500 is going to pay 15,000. But again, the question of private sector asking, do we have the capability of paying, has not been answered. In fact, there is no relief on the private sector. Unless contribution will be rationed into not paying once, you can pay after 4 months, after 6 months or something. But the private sector question has not been answered. That tells you directly that the intention also was to rob the private sector that money. And they've been forced into some sort of a tax. If it is a tax, then why should employer match with what we're giving? If it is a tax, then employers already have some corporate tax. There are a number of other taxes clumped together. Now this has also been increased, has also been included. And this money is not going to be recouped back, surely. Why then are we still going after the employer? I want to tell you something. The MPs are saying that the report was tabled in Parliament last night, and by tomorrow they're supposed to debate it. So the hurry in which it's been done is very suspicious. Someone needs to understand consolidated fund, and I want to use a very good example. During, in 2014, there was the discussion about Eurobond. Now, if you remember the contention, in 2014, I was a second-year student in Masai Mara University. And I am so much acquainted with this because this is one of, I think I did Eurobond story as my project. Not my project, but as part of my assignment. And I followed the Eurobond. So this is what happened. That Eurobond, immediately it was taken to, not to borrow locally, Uhuru Kenyatta didn't want to borrow locally, allegedly, not Uhuru Ruto, did want to borrow locally because it will affect the interest rates of the banks in the country. So they went to that international market and took it, and instead there was a contention that that money never went to the consolidated fund. It went to two accounts, one to an offshore account. Then after an offshore account, some part of it was used to pay a syndicate loan. And after paying syndicate loan, there were already a discussion about how some budget were rerouted directly to a project in some ministry here. The whole discussion was that Auditor General Ouko, Edward Ouko by then, could not trace the Eurobond in the consolidated fund. So for people who might have followed that story well, you realize that the discussion was, we took a loan and it never came into the consolidated fund. This is the place where we receive our revenue. That's why I told you it has three accounts. Loan account, your pesa inaingia, trust accounts, that's locally, and then there is the revenue account. So when that money gets there, it's government to decide what it's to use with it. I know to some extent we may not get an accountability of this money. If it is put as a tax and it is put there, it's not set aside as for the housing levy. So I don't know whether we're still talking about eradicating slums or the whole story about it. You can take this to the bank. No houses. The question of directing the levy, the house ownership, has not been answered. No house. No guarantee of getting the house. And that's the sad state of the affairs. Let's wait for the full report tomorrow. I will look at the other taxes.